You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 9th day of September 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you cannot see the screen I have up, you go to our homepage at CFRN.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You'll get a reminder email each day right before the show, so you don't forget. And in that email, there'll be a link. Now, when you click that link, you join with one-click access, and you also have access to the chat box so that you can ask questions, participate in the discussion. On days you're out of your office, away from your desktop, not to worry, point any internet-connected browser to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds. You just won't have the chat box. We also stream live during the broadcast on Facebook, YouTube, and Twitter. Let's open with a word of prayer. Lord, we come to you today to pray not only for our nation, but for the nations of the world and their leaders and governors. Whether a nation is governed by a king or queen, a prince or president, a prime minister, or some other form, we pray for each one that they may fulfill your plans and your purposes in whatever they do in their lands. I ask your blessing on those that are seeking to follow your ways, and I pray for your mercy and grace on those that are deliberately defying you as the Creator. Blessed is the nation whose God is the Lord, and whether at a national or local level, I pray your blessing on these men and women that are seeking to follow your way as they implement their authority. I also know, Lord, that the opposite is true, and that those who defy the living God will come to no good. Have pity, God. Convict the leaders of our nations to turn to you. Protect the people that are having to live in nations with corrupt and evil governments. And may you, Jesus, return very soon to set up your perfect kingdom in this world, when the earth will be filled with a true knowledge of who you are. We pray this in your name, the name of Jesus. Amen. Amen. All right. Well, happy Wednesday. Here we are. A week come and gone almost, it seems. Hump day and all of that. Depending upon your time zone, you're over the hump. And let me get some fresh data on my chart. And I will give you the numbers from around the world, the cash markets, the indices. Starting here in the U.S., the Dow. Turnaround Wednesday. Dow up 527 points. NASDAQ up 293. S&P 500 up 72. Russell 2000 up 17. Now for the Dow, that's a gain of 2%. For the NASDAQ, it's a little over 2%. For the S&P, it's a little over 2%. And the Russell 2000, it's good for a little over 1%, almost 1 1/4. Now in the commodity basket, crude oil up $1.14, trading $37.90 last, 3% gain. Gold up $7.60, trading $19.50.80 last. And silver pretty much flat. Now in the Asian markets at the close, Nikkei was down 241 points, or 1%. Shanghai posted a loss of 61 points, almost 2%. And the Hang Seng dropped 155 points. That gives us a red day in Asia, gives us a green day in the UK. And so far, it's a big green Radio Wednesday here in the US of A. And with that, if Michael's ready, we will go to him and get a recap of everything that happened this morning in the live training room. Michael, are you ready yet? Okay, he's not quite ready yet. So let's do this. Let's take a quick look at the daily chart of the S&P. There we go. Now let me refresh it. Sometimes it gets a little out of whack. There we go. Okay, so this, of course, the new all-time historic high in the S&P 500 E-mini, 35.87. Now, when price could go no higher, that means it found resistance. The way markets work, once price finds resistance, a spot it cannot get through, it will reverse in this case and go look for support. So we dropped like the proverbial rock right down to the daily BBC, caught a bounce up to this 50% reverse fib, which is from the high to the low. So we bounced and caught that, which again became resistance. A 50% bounce in either direction will almost always give you a bounce in the opposite direction. So as we rallied up to that 50% mark, we then sold off to the BBC, where it held as good support for the entire session, and then the bottom dropped, took us down to that 38% fib of just the last leg up. Now when we put these fibs on, we measured from here to here, and that gave us this 38, which also lined up, as you can see. In fact, we do this again so you see how the process works. And Michael, whenever you're ready, just let me know.
Okay, I'm here.
Oh, are you? Okay. All right. Yeah, I was just spending a little time here. Okay, so that's the last leg up from the low to the high. Okay, and we're sitting just on top of that 50% fib retracement. Or we came down to it. I don't think we quite touched it. The swing low was 32.95.50, and this says the 50% fibs 32.87, but yeah, we know fibs are an area. I talked yesterday about a potential low of 33.13, which we have since sailed through, and now we're working our way back up to the BBC, where potentially we'll find some resistance. And if we just do the reverse real quick from there to there, that allows you to see the areas that actually kind of overlap. Spread it out. There we go. So 50% last leg up, and then overhead we'll be dealing with that 50% reverse fib. If we can get through the BBC, that's the next obstacle overhead. Also think of it as yesterday's swing high. All right, buddy, it's all yours.
Okay, I got it. Here we go. Alright.
Okay, there you go. It's locked and loaded. All yours.
Excellent. Excellent. Let me get this running. Oops. Nope, not that. This. Hold on a second, guys. Just give me a second. I could open stuff back up. I don't know why it shuts down on me all the time. Okay, here we go. All right, so good afternoon, everyone. Today is Wednesday, the 9th day of September 2020. This spreadsheet goes back over 7 years showing our daily results. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. As I said, today is the 9th day of September 2020. We made 19 ticks in the euro. We lost 8 ticks in crude. We made 24 ticks in gold and 2 ticks on the ES. Put us at plus 303.75 on the morning session. Today, it took 10 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract. We actually took a bunch of trades today. We took 15 trades this morning. And I'll show you all that in just a minute. But on the month now, we're in our 6th day of the month, and we're up $4,668 per contract per 2-hour day. That's averaging $778 per 2-hour day. I'm on my 142nd consecutive day of getting the goal, and today is the 167th day of the year. On the year now, we're at $68,124. That's averaging $407 per contract per trading day. Okay. If you are not a member of the CFRN family and you want to be, go to EminiFuturesTrading.com. We've made it very affordable and pretty easy to do. So go to EminiFuturesTrading.com. Okay. Okay. Now we'll get into what happened. Today we had a pretty big day in gold, but we only had a few trades. Let me scroll back here. All the way back here. Here we go. This was our first trade of the day. We picked up 10 ticks right here. And that was the goal for the day. So, you know, what we encourage people to do is establish a goal that they can get pretty much every day. Something that's achievable pretty much every day. And then just trade more contracts. Get that goal and be done. See, I would have been done in 10 minutes. It was actually even less than 10. It was 9 minutes, 9.5. There was a follow-up trade right here. Now, I was going over the YBR trades today during the room when, you know, things get choppy. And they did get choppy on us. I'm sorry, they did get choppy on us. But we had right on the YBR with a down close right there for a short. And you got to have the right kind of separation down here in the slingshot when you get a trade like that. Here's another one right here for a short. Here's one for a long. Here's one for a long. We missed that one. We grabbed 12 ticks on this trade right here. This was a trend line trade. And we grabbed 12 ticks on that one. And over here, I don't think I counted that. I didn't. Let me look at my golds and see what I actually ended up with. Okay, well, here we had a shorting opportunity. It was a down close below the trend line. I know the trend line is not drawn there, but I said it and I did it. But I didn't mark it. We had a break-even trade there, +4 right there, put us at +24. And a break-even and a break-even. The YBR trades, let's see. You had red on the YBR with a down close right there, bearish separation. Blue on the YBR with an up close right there, and bullish separation. Blue on the YBR, but the cycle was going down too steep. And red on the YBR with a down close, bearish separation. Blue on the YBR with an up close, bullish separation. You see the pattern, right? Anyway, we ended up +24 on gold. That's what I'm counting anyway. I think it was actually +34. But okay, here we go. This is the euro. On the euro, our first trade was right here. We picked up 5 ticks. Second trade was right here. We picked up 10 ticks. Third trade was right here. We picked up 4 ticks. That put us at +19 on the morning session on the euro. Now, the YBR trades right here. Right here. There was a trendline trade here and here. YBR trade here. And that was pretty much it for the morning session on the euro. But it was pretty good, you know. And crude oil kicked my butt today. We started out over here on crude. Now, I'm not doing the YBR trades. I'll show them to you, but I didn't do them on crude. There was a long right there. There was a long right there. A short right here. Then we grabbed this one. This was a trend line trade. We picked up 8 ticks on that. Okay. And then it turned around. Excuse me. It turned around and started to move back up. And we ended up with a break even right there. And we stopped out twice in a row. Bing, bing. And, you know, the stop outs, well, this one totally, you know, went against us. So that was okay. This one stopped me out to the tick, and I kind of knew it was going to. And then it continued on. Now, during the break, let's take a look. There was a long trade here. This cycle's not right. That was pretty much it. There was one more trade right here, but that was going into the high of the day. Okay, that was crude. Now, the ES was a total miss today. We only took that one trade right there, I think. No, we took 3 trades. We took that one for a +2. We missed that one. Missed that one. Let me just go back to the beginning. Okay. Here, we'll start out right here. You see all this chop right here? It was just nasty. And you can't trade that. Okay, you can't trade that. You got to wait until it breaks out like this. And there was a long trade right here that I missed. And then it just got back into the chop. And I was trying to advise people as the chop was beginning that it was likely going to be choppy and to just wait, because the numbers are just bouncing back and forth and back and forth and back and forth. Like right now, crude wants to get up to 38.35. The ES, it doesn't have a clue where it wants to go right now. I'm thinking on the upside, 34.08. On the downside, 34.04. But anyway, what we did do is take a bounce off the BBC right here, and we got to break even on it. And then we missed that one. We had a trend line trade right here. We ended up with a break even on a whole bunch of just nothing. You know, the YBR trades are working out, but you had to be fast because the markets were really fast. You know, the ES is trading at about 25% its normal volume. I mean, not volume, but on the bid and ask side. So the speed that it's trading is really fast. We had a big leg up right here. There was a long opportunity right there and right there. Then it came back down, gave it all back. You know, when Dwayne does his fibs and the retracements, it went from here up to here, back to here. So if I were to draw a line, be like that, and all the way down like that. So we got 2 ticks right here toward the end of the session this morning, and then it got all choppy again during the break. And you know, it was putting in a new high on the day, and this is like new all-time highs. So it was putting in a new high on the day. Well, not new all-time highs, I'm sorry, but it was putting in a new high on the day, and it got all choppy at the high. Okay, and that, my friends, was the morning session. So let me go here. Show you one more time. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 9th day of September 2020. Today it took 19 ticks on the euro, minus 8 ticks on crude, plus 24 ticks on gold, plus 2 ticks on the ES. Put us at plus 303.75 on the morning session. Today it took 10 minutes, and once again, just one trade. Knock on wood. And to get to $100 contract. We took a total of 15 trades today. So on the month now, we're at $4,668. That's over 6 trading days, averaging $778 per contract per trading day, per 2-hour trading day. I've now gone 142 days consecutively getting my goal. And we are now at $68,124. That's over 167 days, averaging $407 per contract per trading day. Okay. If you are not a member of the CFRN family and you want to become one, go to Emini Futures Trading eminifutures.com. eminifutures.trading.com. Okay. And with that, we can pass it back up. Fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir, I am.
Good.
I'm ready. Okay. Recap of the recap.
Today it took 10 minutes and one trade to get to $100 a contract.
Okay. Good job. So from the daily perspective, guys, the really important numbers that we should keep in mind, maybe jot them down on a little notepad, would be this reverse fib here, which is charted out at 33.40 and a half. The high of this candle is 33.47. So it's an area, so you might call it 33.45. Okay. And price has to get through the BBC. As long as price is below the BBC, and BBC just stands for bull, bear, cross. In other words, when price gets below the BBC, like it did during the pandemic crash, we anticipate lower prices. So we had our bearish cross. That's when red and falling gets below the BBC. In other words, it crosses below. We then expect lower prices. This is the daily chart, and we got lots of lower prices all the way down to March 23rd. That was the pandemic low, at least so far. And then we got our support, which took us to resistance, which brought us to support at blue and climbing. Think of red and falling as resistance or bearishness. Think of blue and climbing as support or bullish. See, that's price pulled back into blue and climbing, caught our support, got our bullish cross, and then that took us on this journey, which I'll scrunch up a little bit so you can see it, where we had leg after leg after leg, big leg, each time price reverting to the mean or pulling back to the BBC. Then we struggled for many sessions to break red and falling, because remember, that's good resistance until proven otherwise. And just as we were about to get the bearish cross, price turned back up. Red and falling went to blue and climbing. Once again, we're above the BBC, so now we're looking for higher prices. We're climbing the back of blue and climbing up to areas that we had determined, based on historic price action, would be potentially good resistance, and we did see that happen over and over. So, two important numbers, areas, 33.45 here on the upside, okay, and then of course down here, could we call it 32.90? Swing low is actually 32.95 and a half. Yeah, but again, that's an area. So price is going to try to do one of two things: take out this high so it can continue up to that 62% reverse fib, where it would then run into red and falling, which would be very, very similar to what we just saw here. Price battling session after session after session after session, trying to get through until buyers finally won. By the way, buyers always win eventually. That's how the indices were created. You can't trade the actual index. You can't trade the S&P 500 index. Man had to create derivatives, futures, and options, and a host of other things, so that you could make trades based upon the numbers of the index. With the S&P, it's 500 large cap companies. The Dow's 30 blue chip companies. Russell 2000 small cap companies, and each one of those indexes has a whole list of qualifications to become a member. There was just a big shakeup in the Dow ranking because when a company misses their numbers a couple times or starts to show signs of weakness, they're taken out, and you can't have a vacuum. So when they take one out, in fact, let's see exactly which ones they moved around. Here's the website Michael was just talking about, EminiFuturesTrading.com. If you still wake up every day with that knot in your stomach, that's fear. Okay? How about no fear? You can get rid of fear. You can absolutely get rid of this. It doesn't happen overnight. You haven't built that wall of fear overnight. It's taken time, mistake after mistake after blown accounts, you know. Hey, and I'm preaching to the choir because what you've done, what's happened with you, has happened with myself, it's happened with Michael. Anyone who's ever tried to learn how to become a consistently profitable trader has wrestled with all of the same things. And our whole goal is to reduce everything to the simplest common denominator so that you can, maybe you don't become a hero, maybe they don't write a book about you or make a movie about you, but you're able to come to the charts each and every day, fire up your platform, and reach your goal, whatever that goal may be. Most of our new traders set a goal of 2 points a day in the S&P or an equivalent in some other market. That would be 10 ticks in gold or 10 ticks in crude. 2 points in the S&P or any of the ones I just mentioned. It's $100. And I know that in today's economy, $100 a day won't pay the bills. However, once you put together 10 consecutive days in a row in the simulator where you reach your goal, then our 24/20 blueprint gives you the green light to go live with one contract. See, you need to make sure, you need to prove to yourself that you understand the simple methodology, the simple strategy, the simple rules before you put real money to work. That's true of any strategy, any set of indicators. Otherwise, you're just throwing money at the market, and it never ends well. Once you have those 10 consecutive days, you get the green light to go live with one contract. Your new goal becomes to increase your live account balance by $2,000. Why $2,000? So that you can underwrite adding your second contract. Now, with 2 contracts, the same 2 points a day is $200. Probably still doesn't pay all the bills, but then the blueprint's going to tell you when it's time to add contract number 3. Okay, so that's the same 2 points, $300 a day. Needless to say, by the time you work your way to 5 contracts, it's $500. 10 contracts is $1,000. And honestly, if you can consistently take 2 points a day out of the S&P, once you've earned the right to trade 10 contracts, that's $1,000 a day, and that does put you in the top 3% of wage earners worldwide. Now, I'm going to tell you that the way to get from where you are now to where you want to be is not a lot of complicated strategies, endless shiny objects, new miracle discoveries, all the stuff that you're getting pushed. It's not the answer. We've been there, we've done that, we bought it all, and we started rolling our own. But we were always one mouse click away from greatness. And we just needed one more thing, one more filter, one more oscillator, one more thing to prove that we were going to be right. And those are 2 words you need to take out of your vocabulary, right and wrong. Okay? Got to get that way of thinking out of your head. And so it was as we began to get rid of things instead of adding things that we started to see a very different picture, a clearer picture. We began to understand, and we thought we knew this, of course, but we really began to understand how markets work. And we figured out that if we can simply align ourselves with the market, whichever market it is we choose to trade, by applying some very basic principles to how price moves, we can be on the profitable side of the street more often than not. Okay? We don't know the future. We don't know what's going to happen next, and we don't try to convince you that we do. We tell you up front, no one can predict the future with certainty. That's not how God created this universe. Can't change the past, can't know the future. Those two things are inextricably linked for eternity. But when you understand how markets work, and you understand how to read our indicators, it becomes crystal clear what the market is trying to do next, what the next obvious high probability move is, based purely on logic. It's just simply logical. Prices here, BVC's here, weekly zones here. Well, I see what price is trying to do. So now you just align yourself with the market and do what the market does. Sounds so simple. How come I never thought of that? Well, how come it took us so long to think of that? Every trader has to take their own journey. But this is what we offer: confidence versus fear. Now, I know Michael mentioned it. We've made it incredibly affordable for anyone who is truly serious about learning how to trade. Not another magic trick, not another illusion, not another grumpy guru, but the ability to sit down in front of a chart, know instinctively what the next high probability move is, and then just flow with the market. That is what we offer, along with all this other stuff that you'll find on this page. Now, we came to this browser to do this. Recent changes to the Dow. Let's see if this is gonna give us the answer. Okay. Is that okay? All right. No updates, please. And I don't want to read a lengthy article. I just wanted the short list. Maybe this has it. The Dow Jones Industrial Average will see a handful of important changes take effect Monday morning, but it is perhaps the change to how it is calculated that will be the most important for Wall Street over the near term. Starting at Monday's open, the so-called divisor, the figure used to determine the influence of any of the 30 components that make up the price-weighted Dow, will be changed for the first time since April of 2019. The move is at least partially precipitated by Apple's fifth stock split in its 40 years as a publicly traded company. Apple's 4-for-1 stock split set off a cascade of changes by the owners of the blue chip benchmark S&P Dow Jones indices, which added Salesforce CRM, Amgen AMGN, Honeywell International, and the ones that they asked to leave the building were Exxon, Pfizer, Raytheon, XOM, PFE, RTX, and HON. So these guys are saying goodbye. Actually, Honeywell was added. CRM, Amgen, and Honeywell added. XOM, PFE, RTX out of there. Now, will that change the way the Dow moves? No. Price flows from support to resistance, back to support, back to resistance, over and over, again and again, day after day, as it has done since the inception of the markets. Now, Valerie just sent me a recap on where we are so far this week with Logic 247. We have two different alerts. One is called the Logic 247, and Sunday nights at 6 p.m. Eastern, that's when Globex opens for the week. That's when we go to work, that's when the channel opens, and that's when the alerts start to flow whenever opportunity presents itself. The other alerts, which are based on historical price action, those come out as a static report at the beginning of each session. So the logic, we'll walk through the concierge. So far this week, of course, Monday a holiday, but we were open Sunday night, we were open Monday night. We've issued a total, as of noon today, 40 alerts. 3 never triggered. 11 are still in the works. So we've had 26 actionable alerts so far this week. 5 of those were stopped out based on not risking more than $300 per contract per trade. That's 19%. What we've averaged over the last now 110 weeks is 20% do get stopped out on a weekly basis. Last week, week 109, we had a total of 62 alerts, 8 never triggered. That gave us 54 actionable alerts for the entire week, Sunday through Friday. 4 of them were stopped out, 7% of actionable alerts stopped out. Now, that number for last week is not a typical number. The typical average is 20%, more in line with what we're seeing so far this week. However, yesterday at this time, we had 27%, because at the time we only had 15 actionable, of which 3 had been stopped out. So we're very transparent with what happens when we have a rough day or even a rough week. We don't sweep that under the carpet, because you start sweeping stuff under the carpet, you're going to start tripping and falling down. Now, these logic alerts, the way they look in the channel when they come your way, let me just scroll up a bit here and show you what those look like, and then I'm going to give you an opportunity to take a screenshot of the Concierge Trade Alerts if you would like. So here's the logic alerts. We are now officially in week 110. The first alert to go out Sunday night is to be long the S&P 3390. I'm sorry, to be short the S&P 3390, and the initial target 3388, potential support 3385, and below that 3350. So you've got the initial target, then you have a second target, and then you have a third target. Okay, so we dropped from 3390 to 3380, 10 points, $50 a point. That's $500 per contract traded. Now, once you've earned the right to trade 10 contracts by following the blueprint, by taking things slowly, by doing what you're supposed to do when you're supposed to do it, no cowboy, no shooting anything that moves, but actually putting to use the basic methodology and strategy that we teach you. By following that, once you earn the right to trade 10 contracts, a move from 3390 to 3380, 10 points, 500 with one contract, 5,000 with 10. Okay, but the worst thing you can do, and I can't say this strongly enough, don't put the cart before the horse. Very awkward for both the cart and the horse. Okay, you have to exercise the discipline, the self-control to pace yourself one step at a time. The blueprint will tell you when it's time to add contract number 2 and number 3 and number 4. Now, the difference between the first contract and every other contract is the fact that when you're adding another contract, you're adding it with profit you earned in the market. That's how you know that you're actually building a profitable trading business, because you have profit in your account. And you're using that capital in your account to increase the size that you trade. Some people like to chase more points. Our philosophy leans more towards, a couple points a day is really all you need. And once you become very consistent at that, then the focus is simply to add additional contracts to your contract size as the blueprint lays it out. Remember, the 2420 blueprint, it is designed to help you go from 1 to 20 contracts over a period of 24 months. So here's Sunday night, short on the S&P and short on the Dow, short on the Russell. And here was short on the NQ. Now this NQ dropped from 352, made it the first target, and it didn't quite make the second target. Okay, but just to give you an example, the swing high there was 11,307. 11,307 minus 11,352. It's 45 points. The NQ pays $20 a point. So the potential in that trade, this one trade right here, $900 per contract. And we had silver. The trade was to be short 38.50, initial target 38.40, potential support down at 37.80, but it only dropped to 38.18. So that's from 50 to 20, it's about a 30-cent trade, about $1,500 per contract traded. No trigger. Here's a long on silver. It went from 27.36 to 27.38. So it hit the initial target, and that is as far as silver made it on that move. 2 stop outs back to back, Russell, NQ. That's going to happen. Okay, a lot of traders come in early in the morning, and they just want to hit. They got to hit that first trade, or the day's lost. You have to come away from that way of thinking, because there is a distribution of profitable and non-profitable trades in trading, and you never know when you're going to have 3 in a row that are profitable, or possibly 3 in a row that aren't profitable. Now, that doesn't mean your strategy's broken, your indicators are broken, or you're broken. It's just how the distribution curve works. Here's the British pound. Here's the S&P. Now, short at 34.02, and it dropped to 33.92. That's another 10-point move. Yep, 39.02 to 34.02. That's another $500 per contract traded. And then there's crude oil to be short, 39.10, and it dropped to 38.90. That's $200 per contract traded. And that's just the initial move. Now, all of these continued to move in most cases further, but there was a pullback. And so when Valerie does the recap, it's just too complicated to try to track all the additional triggers. However, with Concierge and Logic, there's always a high probability that the trade, once triggered, will retrace. Important prices, important areas are almost always tested, and you'll have actually a second opportunity to trade that trigger. Here's a hedge on crude. Selling, or that should have been gold. Yeah. Yeah, somehow I typed that in wrong. Anyway, we went from 1931 to 1929. Valerie and I both missed that. But we both knew what it was because she was able to recap it. And there's a stop out on silver. And on this one, it ran right to the tick, okay? But That means some people in line, because it didn't trade through it, it means some people in line got filled, some people did not. So that's what that 47 to the tick. Some will hit full target. Step out on the Dow. No trigger, no trigger. This brings us into yesterday. This was a short on the S&P. 33.35, initial target 33, potential support at 33.29, and it made it to 33.28 and a quarter in that initial move. So from 35 to 28, 7 points, $50 a point, 350 per contract traded. Now remember, the logic alerts are coming around the clock 24/7 as opportunity presents itself. The times you see here are Pacific because I'm on Pacific time. Then we had the Russell sell 1506, made it past the target at 1504, traded down to 1502, almost 1503. So it's a 3-point trade, $50 a point. And on this one, 1160 to 1150, that's $200 per contract traded, and then it actually went another 10 points at $20 a point, so another $200 per contract traded. So from 60 to 40, that's 20 times 20, $400 per contract traded. Now here's a long on gold from 1941. PT, it only made it to 41.80. PT so far, still cooking. Here's a long, now this was the gap fill that I discussed in the discussion group. If you're not following along the discussion group, I encourage you to do that. You'll learn so much so quickly. So make that a part of your routine. Keep up with the conversations in the discussion group. And if you need help getting connected, reach out to Valerie. She'll be happy to help you. So this was a long on the S&P, the gap filled 24 to 26 to 30. It actually ran up to 33.54. So from 24 to 54, that's 30 points at $50 a point. It's $1,500 per contract traded. Then we had a gap fill on the Dow. That was to be long at 27,430. And it ran all the way up to 27,505. That's about $300 per contract traded. Gap fill on the Russell, 1,500, made it up to 1,504. It's $200 per contract traded. NQ gap fill, $200. And then these are all the ones that we're still waiting on. That one was stopped out. And these are the other ones that we're still waiting on results for. So once again, this week so far, this is where we stand with Logic 247 based on current price action delivered live in real time around the clock. 40 alerts so far this week. That's supposed to say for Wednesday. Let me fix it. There we go. As of today, Wednesday. Holidays always throw us off. 26 actionable, 5 stopped out, and that's where we want to be. That 20% average. Okay. All right. However you take your screenshots, if you want to take a screenshot, you can do that right now. Concierge Trade Alerts. Last night, got them out at come on. Here we go, 6:35 p.m. Eastern. S&P, Dow, Russell. Now, this report you're only going to get it once per session. okay, shortly after the Globex open. But the numbers are good for the entire session because important prices, important areas are almost always tested. Okay, so do the S&P, the Dow, the Russell, Crude, NQ. I haven't done 10-year notes, gold, Canadian dollar, euro, British pound, silver. Yes, Tim, I did speak with Garrett, and he said he's going to try to come on today, but he had to make a overseas phone call, so he'll either pop in or he said he'll join us tomorrow or Friday. Okay, now let's take a look at a 30-minute chart of the S&P. Get down to the nitty-gritty. Okay, come on down. There we go. All right. Yes, 30-minute chart. BBC. Bearish cross, lower prices. Bullish cross, higher prices. Over and over and over. Okay? Now, on this bullish cross, right, we go right up to the BBC. Once price gets, we get over the BBC. That is a current weekly zone, 3349 / 3500. What do I do? Let's try it again. 3349. Okay. Let's try this again. $3,500. Oh, I see what I did. Sure this isn't Monday? I'll get it right this time. Promise. Because now I know what I did wrong. 33.50. Like magic when you do it right. Okay. Now, overhead, that is a last week weekly trading zone. So, we're going to drag that into position, 34.15. $34.16. Okay, so we are at a weekly trading zone. Now, when price, these are current zones. Let me just get these last week zones out of the way. Okay. So those gap fill trades that we were talking about, that would have been these. Okay. So we go from zone to zone. When price gets to a weekly trading zone, one of three things happen. The most common thing to happen is consolidation. That's what you see right here. Okay, now this is some very wide-ranging consolidation, but consolidation it is. Just as you see consolidation here. Now, only three things happen. Consolidation, the most likely. Rejection. That's where when the 30-minute candle closes, the only thing left touching that zone is just the wick. So price was rejected and rejected and rejected. Again and again and again. It tried to pull up to the BBC. Couldn't quite make it. So we finally took out this zone. And so whereas we were consolidating just above it, now we're consolidating just below it. And then as we pulled back up, right, consolidated for an hour. Came down. Now that low is 21.5. And that high is 23.5. So this wick came back to touch that high. So, you know, we filled the gap and then we filled it in the other direction and filled it yet again. But here's where it gets interesting. Okay. On the third and least likely thing to happen, but it's happened more lately than it ever has. We get a leg, we get a retracement to the BBC. The pull back to the BBC holds more often than it doesn't. It held, and it gave us this beautiful trade, long to the upside. We're at a weekly trading zone, and so now that we're here, one of three things will happen. We'll consolidate for a bit. Don't foresee this being a rejection scenario. Could it all of a sudden get a burst of energy and slice through? Could. But here's what you got to be real careful of. Right here where this bearish cross took place, that's potential resistance. Now that's one of the most powerful things I can teach you right here today, the amount of time that we have. Okay. Now when we got the slice here, what typically happens with a slice is if price slices through a zone like it's not there, it will retrace back to, now this, you can't see the tail of that candle, but it gets down to 33.50.50. So it pulled back within 2 ticks of the zone it just sliced through. And so it failed to be resistance, because that's what we expect. When price comes up to a weekly zone, we expect resistance. It's what we expect up here until proven otherwise. So we get above, we retrace back to the zone, it failed to be resistance, now it proves to be support. So we get another leg, get a little double top right here, and the price gets all the way back to the BBC. And at this point right here, price is now not only above the BBC, it's also above blue and climbing. And as we take out these highs right here, right there, just climb the back of blue and climbing right on up. If we get on the other side, I always like to give a minimum of 2 points on the other side before I would take a long entry. So that long entry would be about maybe 34.18, but you know, the ATR, or average true range right now, let's just see. Average true range. And let's look back. Yeah, 48, that's good. So the average true range over the last 48 30-minute candles has been about 12 points. One candle on average over the last 48 worth 12 points. Okay, so that's high volatility. Now at 34.16, if you were comfortable getting in at about 21, you got to realize it's going to be a short-lived trip. Maybe you could go 20 to 24, or be conservative, 20 to 23. It's not an official alert. I'm not going to put it in the channel. I'm just going to put it up here so that we can look at it again in a minute and just see how price handles this. When price reaches a weekly trading zone, that's a big deal. If all I had on my chart was the BBC and the weekly trading zones, I would have enough. Once you understand, markets are on a mission, okay, the buyers and sellers, which are these people, the buyers and sellers. This is what moves price. No indicator, no strategy, no oscillator, no trick, no nothing. Buyers and sellers. Whether they're human, whether it's trades triggered by some computer algorithm, this is what moves the market. Don't let anybody tell you different. Okay? It's decisions that they make, and then the actions they take based on the decisions they make. That's what moves price. So far, price really not struggling here at this point. It is midday trade, kind of quiet. So let's jump into S&P last night. The long side was 33.86. Now remember, these are different from the Logic 247 alerts that I just showed you. The Logic, those are the ones that come out in the channel around the clock, whenever opportunity presents itself. The ones we're looking at now, this is the static report that comes out at the beginning of each session. 33.86. And the trade to target is always the weekly zone overhead on a long. And over here, from 34.06 down to 33.50, that was a 50-point trade from the entry to the target. Over here, 34.15 minus 33.86. That's 29 points. Times $50 per point equals $1,450 per contract traded. Okay. Now, what this required, once you get your alert or your static report, now remember, the logic, they're just coming out as opportunity presents in the channel. You know, one after another, based on market conditions, based on market structure, whenever opportunity presents. This is your static report. This is your guiding light for the entire session. Okay? So, on the S&P, you go to the chart, you put two lines in the sand, one at 33.86, one at 32.88. Everything in between is the market just making up its mind what it's going to do. Now, once we trip 33.86, then we're pretty well convinced, at least for the moment, that we should be looking for higher prices. And we know that our trade to target is right overhead at 34.15. That's 29 points at $50 per point. That's $1,450 per contract traded. Now, I suppose that would cover you, I suppose that one trade with one contract would cover you for 14 weeks. But that's just the first trade. The first trade of Concierge from last night. And I just wheeled you through all of the logic alerts for the week. I know you keep waiting for the other shoe to drop and go, well, yeah, but. No, there's no but. It's true. Michael works real hard every morning for 2 hours teaching you our strategy and our methodology. And I spend all the rest of the time putting alerts in the channel so that you have something to trade. It's much easier to teach you how to find a trade setup if I can actually show you one live in real time that you can trade in the simulator or the demo account until you start to get the hang of it. Remember, you want to put together 10 consecutive days in a row, 10 consecutive days in a row where you reach your goal in 10 trades or less before you go live. Why? To make sure you understand the strategy. Throwing money at the market, those days are behind you now. Now you're actually going to learn how markets work. You're going to learn how to trade. You're going to learn our very simple methodology and strategy. You're going to trade it in the simulator until you put together your 10 days. And the blueprint will give you the green light to go live with one contract. Now, if this is a $1,400 per contract move from the published entry to the published target, okay, that's $14,000. Now, that's really just a function of math. It has nothing to do with our methodology. See, we're getting this slice here, okay? Now, where do we anticipate our resistance? Right there, okay? We'll be able to watch this happen together, okay? So, if you chose to stay with this move, that's fine. Just, now, there's no 100% in anything, so I can't guarantee you price won't trade through this area of resistance, but you're going to get a chance to see it struggle when we get there, I do believe. Okay, all right, and we're trading 34.21.5 right now. Okay, might be asked. Daily chart could be hitting the BBC. Well, let me show it to you again. Yeah, price is at the daily BBC right now, which when we approach from below, we expect to be good resistance. Okay. So far, because all these candles are touching the BBC, if price starts to move higher from here, then we will say that this pullback held. Okay, it spiked it, it stretched it, but every candle is still touching the BBC. It's not until we actually pull away from that BBC do we start to consider that it didn't hold. Okay, all right. And this may be the spot. We'll come back and look at it in a minute. All right, here's the Dow. Now, this week for zones 2, 8. Let's see. 2809, 828. So we got a zone at 28095. This week. So that's 095/28,100. Now the next zone above that is 28,535. We'll put that in position. 28,535. That's a lot of room to run, but we got to get through that zone first. Now this 28020, The next zone from this week below us is 27,645, which is down here. Which means we're going to take these out. There we go. So, shall we consolidate it at the zone? Here we got our bullish cross. We move up to the zone. That's a this week zone. We consolidated for hours. Price started to climb. We took out these swing highs. Right? And so once we're here, even if we look all the way over to here, from here to the zone overhead, that was just a nice little walk to the candy shop. Now the alert for the Dow, Concierge. Now often Concierge and Logic will point at the exact same important price, important area. Sometimes they won't match up exactly to the number, but when you do find both of them pointing a finger at the same important price, important area, that's where you will find your highest probability low risk trade setups. All right, so the Dow is to be long 27,960. So that's over here. Okay. 27,960. And so from 960 to 28,095, that's going to be 100 and from 60 to, also got 95, 40, fuzzy brain, 20895 minus 27960. That's not close. We'll try that again. 28095. We have to get our pencil and piece of paper. 27960. That's 135 points at $5 a point. It's $675 per contract traded. Now think about that. $675 per contract traded. So no matter where you are on the journey up Trader Mountain, maybe you've just gone live, just trading one contract. That's a nice day's pay from the published entry to the published target. Remember, the zone overhead is always the final trade to target on a long, and on a short, it's the zone below. Once, if you choose to trade the Dow, reaching your goal 10 days in or whatever market you choose, and you don't have to lock yourself into a particular market, because it's okay in the beginning if it helps simplify the learning process. Then you can certainly focus on the S&P or just the Dow or crude or gold. But over time, what you'll start to see is that under the hood, these markets all move the same. They all have the same basic kind of behavior. You have a leg and a retracement and a leg and a retracement. Now, The next high probability move from here is another leg that puts in a lower low. As we're coming down, we had a low, then we had a lower low. And so if the downtrend is going to continue, then we expect another low. If we don't get a lower low, that's our heads up that the trend is changing. And that's exactly what's happening right here. We're transitioning from a downtrend, as defined on the 30-minute chart, to an uptrend. Bullish cross. Price was below the BBC. Now it's above the BBC. Leg, retrace, leg, retrace. Leg, right up to the trigger, right up to the target, right on through the target. Okay? All right. Now let's look at the Russell. Okay. Price over here below the BBC, falling, falling, falling. We can't go any lower. Support, got to go find resistance. Found it at the BBC. Retracement. Then we get back above the BBC. And as we're taking out this swing high right here, beautiful opportunity up to the weekly trading zone. What you're seeing is the weekly zones create a framework for all of our traders to trade inside of from Monday morning at 6:15 a.m. Eastern, when we send out the weekly zones. We publish them since December 14th of 2009. They're carved in stone for the entire week. Whereas the BBC and red and falling and blue and climbing, while those provide you with what I call dynamic support and resistance, which means it's changing as the market flows, the actual weekly trading zones themselves, they don't move. They're carved in stone for the entire week. So that's why it's really important to get them on your chart first thing. Now, with that said, let's get this in the right spot. We have a zone this week at 33, 34. Okay, and below that, we've got 1498/99. This is a last week zone, and even though we're halfway into the new week, you can see how we consolidated across there. That's because it's an important price, important area. Okay, so, and because that's yellow, we know that's an old zone. And then below 98, we've got all the way down to 63, 64. All right, that'll serve us. Okay, so last night, for the Russell, the long side, 37.90. I'm sorry, for the Russell, 1537, which we've not reached yet. So, is it possible we'll see that today? It certainly is. Got to embrace all the possibilities. 1537. Okay. Now, the short side for the Russell was 1477. We had no trigger on the Concierge. On the logic, as we scrolled through them, I believe we certainly did. I think we had a couple of them. But from a bigger picture perspective, this is just the market making up its mind. You know, are we ready to go challenge the all-time highs? Or is there still more work to be done on the downside? If we take a look at this chart, And we make this a Russell chart. Just this last leg up. We just hit a 50% fib. That potentially will give us a bounce and get us out of this situation that we're sort of stuck in right here. Now, once, without any kind of an alert, concierge or logic, here's the methodology. Bullish cross, price pulls away, price pulls back to physically touch the BBC, up close, get long, 15, 13 and a half, and then price does what price does. Leg, and a retracement, leg, and we're in a retracement right now. And where do we anticipate the market will go from here? Well, we're already caught up in this double top right here. Okay, and I think one of the alerts I put out, I highlighted that as potential resistance. And then above that, of course, the trade to target weekly trading zone. Okay, let's go in Q. Okay, on the NQ, last night's concierge alert, long 11,305. 11,305. Buy. 11,305. Now we got a weekly zone up here at 11,507. Okay. So that's the trade to target. If we get from 305 to 507, now that's going to be basically 200 points, $20 a point, $4,000 per contract move. We haven't gotten there yet. We don't have an exit signal yet. We've still got price, but things are changing, okay, slightly. You'll notice on this climb, price is on the left side of blue and climbing, right? But we've hit a sort of a stall point here. This bearish cross overhead right here, right over here. See that? Okay. That has impact. Okay. Does that mean this is going to be the swing high? Could be. So would you go ahead and take profit here if you were long since 11,305? Well, considering how much profit that potentially is, you know, we're talking, what did I say, 200 points? 11,305 to, that's if it makes it to the zone, it'll be 200 points. If as far as we got was, well, let me break it down this way. 305 to 405. That's 100 points. 305 to 405 is 100 points. At $20 a point, that's $2,000 per contract traded. So there would be nothing wrong at all with going ahead and taking your profit here. We don't have an exit signal yet, but price is now directly above blue and climbing as opposed to being on the left. So from a market structure perspective, you're long, No shame in cutting the line and taking your profit right here. If you choose to stay with it, then I certainly would address my stop loss, and I would make sure that it was just below that swing low right there. That means there's still plenty of profit left in the trade. All right, let's look at gold or crude. Okay. Last night's concierge alert on crude was to be long, 37.90. Swing high so far, 38.45. So that's $550 per contract traded. $550 per contract traded from 37.90 to 38.45. It's 50 ticks, $10 a tick, $500 per contract traded. Okay. Now, again, to the simplicity of the methodology, this zone for this week is actually 38.65. /70, and below that is 37.75. Okay, so this is just a very basic, simple trade here, taking advantage of what's turned out to be almost a zone-to-zone move. We'll know over the next few candles here. So if we make it to 65, it's 75 points, $750 per contract traded. Okay. And if we get above this zone looking left, this is where your potential obstacles are. Okay, gold. Last night's alert on gold was to be long 1950. So from 1950, we're putting a high at 57.80, $780 per contract traded. Price got back below the trigger. Did it again. So that's two $700 per contract trades. One alert. Not unusual. Happens all the time. The short side is 1928. Which would be right there. 1928, the swing low was 26.30. So from 28 to 26.30, that's $170 per contract traded. And last but not least, silver. Long 27.04. And we put in a swing high at 27.18. So that's $700 per contract traded. And as you can see, it got back below the trigger. We triggered once, triggered twice, triggered 3 times. So there you have it, the Concierge Trade Alerts. All of them from last night. So again, all of our traders receive that report with the entry. The weekly trading zone lets you know on those alerts where your target's going to be, your trade to target. And then the Concierge Alerts, when they come out, again, all you have to do is go to your chart, draw your line in the sand, okay, long side, short side, long side, short side. Be patient and let price get there, or use one of the Logic 247 alerts to take you there. And again, so far this week 110. As of noon, 40 alerts issued, 3 never triggered. Still waiting on the results of 11. So we've got 26 actionable alerts. 5 have been stopped out based on not risking more than $300 per contract per trade. 19%. Okay? And that's been our average for the last 110 weeks. So if you're tired of struggling, tired of the guesswork, wondering if the market's going up or going down, we have a solution. Go to EminiFuturesTrading.com. Okay? You have to stop trusting the gimmicks and the gurus and the magic tricks and the discoveries and the shiny the endless array of shiny objects. The one thing that's going to change everything. There actually is one thing that can change everything, and that one thing is that you actually learn how to trade. So our goal is, not to just give you the tradable alerts. My goodness, just giving you these alerts is certainly worth the nominal charge, right? But we're taking it a step further. We're teaching you how to go find these on your own, so that the day comes, you don't need us. You don't need me to show you the next high probability trade setup. Because between Michael and I, we've actually taught you how to find it on your own. If you go to EminiFuturesTrading.com, everything that we offer, everything we do, it's all outlined right here. And I added a fancy thing. Where's my fancy thing? I thought I did. I must not have published it. Oh, maybe I didn't refresh my page. Ah, there it is. Yeah, see, start trading today. Everything a trader needs, $97 a week. You can become a lifetime member anytime you want, so that you don't have to make weekly payments. If you just want to get your toe in the pool, get your toe in the pool, right? Get your feet wet. $97 a week. All the alerts I just walked you through. Only one of those. Only one of the ones I just walked you through. That covers you for the week. So it's really the best of both worlds. Someone teaching you how to trade while someone is also giving you trades to use the knowledge that you've just gained. That is what I think they call a win. You can also send us a message right here. Okay. Very fancy. Told you. Emini Futures Trading.com. That's all it takes. Now, good word for the day. Let's see. Regeneration. Everyone who believes that Jesus is the Christ is born of God. 1 John 5:1. After Adam sinned, We read that he fathered a child in his own likeness, Genesis 5:3. Ever since, we've all been born in the image of fallen men. Sometimes people say he's just like his father, or we say my dad was an angry man, now I've got his temper. Dad couldn't stay with mom, now I'm going through a divorce. Dad was an alcoholic, now look at my drinking and drugging. Dad was a workaholic, now I work 16 hours a day. Dad wasn't affectionate with us kids. I don't even know how to hug my children. History really repeats itself over and over, again and again in our life. And we have to do something to break the cycle. In Peter 27:8, it says, "My heart says of you, seek his face. Your face, Lord, I will seek." So now we're going to take a leap into talking dogs. That's what I said. Sam Morrison discusses how God can use our pets to speak to us. Looking back on some dogs he has owned and the lessons he learned from them, he shares this with us. One such occasion was when Ranger, our 11-pound Italian Greyhound, was sitting on my lap. As I relaxed in the recliner, I noticed that familiar, endearing little tilt of the head as he looked me directly in the face. I found myself wondering what his purpose was. A second later, I warmed to the pleasure of divine inspiration as the explanation flowed into my stream of thought. Ranger was seeking my face. You see, dogs become students of their owners. Their comprehension of spoken human language is limited to a handful of words. Their capacity to understand a creature of far greater intellect is restricted. So they study our movements, our facial expressions, our hand gestures, other body language. Likewise, we have limited understanding of our master. So how do we seek the face of someone who is so far our superior? God reveals himself through his word. That's where our pursuit begins. How sad that so few professing Christians read and study the Bible on any regular basis. But beyond the scriptures, there are other ways to seek God's face. Pay attention to the ways of God as the Holy Spirit moves upon your heart during church services. Learn from his interventions in your life and those of your fellow believers. Behind his works are his ways. And as we know, his ways are not our ways. His thoughts are not our thoughts. So I encourage you today, determine to become a student of the Master at every opportunity. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard, and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.